Good morning, I'm Robert San. From your wallet to the wider economy, join us as we follow the money. Inflation fell to 6.4% in June as Middle East tensions eased. But while headline inflation slowed, core inflation went up. Che Sulit is live from the Philippine Statistics Authority with the details. Che?
That's right, Robert. The country's headline inflation rate eased to 6.4% in June from 6.8% in May. Based on the latest print from the Philippine Statistics Authority, transport was the main driver to the downward trend. Fuel prices dropped earlier in June following the peace deal signed between the United States and Iran. Still, global oil markets continue to fluctuate due to geopolitical uncertainties. National statistician and PSA Undersecretary Claire Dennis Mapa says the trend points to a slowdown, but risks remain. He adds that the ongoing Middle East conflict may still impact the country's inflation rate for the next months. The PSA also recorded a nearly 3-year high inflation rate for electricity prices at 12% for June. This comes amid consumer concerns on power prices spiking during the summer season, brought by increased electricity consumption and tight supply. At the same time, MAPA highlighted core inflation excluding volatile items such as food and energy has continued to rise to 4.4% from 4.1% in May. He pointed out prices of commodities including bakery products, alcoholic beverages, and utilities like rent and water also went up. Health and education costs also went up, partly reflecting the start of the new school year. The latest inflation print is within the Bangko Sentral ng Pilipinas 6.0 to 7.0 forecast range for the month. That's the latest from my end, Robert. Back to you.
All right, thank you, Che Sulit, for that report. We're taking a quick break. Keep following the money. Welcome back to Follow the Money. Big moves in the boardroom from a delayed stockholders meeting in a billion-peso takeover to a major renewables deal and an expansion push. Jillian Geronimo has today's top corporate stories.
Dito CME Holdings Corporation has postponed its annual stockholders meeting for the second time with no new date yet set. But it must schedule the meeting within 60 days of its request with a deadline of September 1, 2026. The delay comes as Dito faces a wider 6.76 billion peso net loss in the first quarter of 2026 and a capital deficiency of 117.73 billion pesos. Despite this, the company expects revenues of up to 27 billion pesos for the year, supported by over 16 million subscribers. Trilyonario Enrique Razon Jr. has increased his control over Apex Mining after a 1.68 billion peso block purchase. Through Prime Strategic Holdings, the group bought 117.81 million shares, raising its beneficial ownership to 67%. The deal formally consolidates control over Apex, which has seen a series of ownership transfers since the Cru Gold era. Razon's group has continued to build its stake through acquisitions and tender offers over the years. ASEN Corporation has agreed to sell a 49% stake in an Indian wind farm to a Dutch affiliate of Mitsubishi Corporation. The deal involves the JOS Renewables India project and will close in phases, starting with a 10% stake. Proceeds will fund the construction of a 100-megawatt wind project in Karnataka, India. ASEN continues to expand its India renewables pipeline, which now exceeds 7 gigawatts. Asia Best Group International is seeking shareholder approval for up to 6.7 billion pesos in asset infusions. The plan includes vend-in deals for their underlying properties, Industry Movers, and Kabalayan Housing Corporation in exchange for new shares. The company is being transformed into an infrastructure and property holding firm under new controlled groups. Asia Best is also building a logistics, housing, and modular construction platform to support its expansion. For Business 360, Jillian Geronimo, Bilyonaryo News Channel.
Inflation fell to 6.4% in June as Middle East tensions eased. And at this point, let's bring in Professor Noel Leyco, Chief Economist of Credit Rating and Investor Services Philippines. Good morning, Professor. Welcome to Follow the Money. Thanks for joining us this morning.
Good morning, and thank you for having me back.
Prof, some good news from the PSA. So is this the oil relief finally reaching households, or are we still one Gulf incident away from reversing all of this?
I think it does, in a way. The fuel prices have been coming down despite the volatility at the Strait of Hormuz. The fuel prices are trajectorily, I think, is coming down, and ceasefire is holding. Although each party is still threatening each other. But in general, I think the effects of the fuel price volatility is already taking its impact on the inflation that we are seeing right now.
Now, for a country like ours that imports almost all of our oil, so we should be highly sensitive to the crude easing. Now, does this vindicate the transitory shock call, or our food and logistics, which still show it's still going high, enough to really reverse this, even when it's down right now?
I think you're right. Although there is a trend coming down, there seems to be disinflation that we are seeing right now, but the core products, the core prices continue to stay up and even going up. So that is even more dangerous. What it means is that the prices that the fuel, or the trend that the fuel prices have taken has already taken its deeper roots in the price structure that we are dealing with right now.
Now, when we look at these statistics, we see one, which is the headline, which has decreased, but we also see the core increasing. Now, which do we really have to look closely at with these two statistics?
I think we have to look at both, but with caution. The headline inflation is going down, seems to be declining, but the core inflation, which represents the more important issues that we are dealing with in terms of going to the market, in terms of our consumption, is actually going up. It's at 4.4 right now. So what does that mean? Inflation has really taken its roots on our daily lives.
So what's the disconnect there, Professor? So which is really more important that the average Filipino should be looking at?
We should be looking at both. There's volatility, which is reflected in the headline inflation. But once that is stripped from the inflation statistics, we are dealing with the real thing now. And therefore, some people will say, how come they say inflation is coming down, but I don't feel it?
Yeah.
That's true, because the products that they are buying, that we are buying, is still up or even going up.
Yes. It's a balance, because we see fuel prices going down, some food prices going down, but also some food products that are still being affected and are rising. So if we look at right now, the statistics that have been put out, does this mean anything right now, or do you need at least 2 to 3 months to see before things start rolling, everybody starts feeling whether inflation is actually really decreasing?
I think it will really take a while longer. I think the cost of production in the Philippines has gone up. It's not just because of the fuel prices going up, but the cost of production in the Philippines is really up.
So everything's being priced in right now?
It should be. Actually, when we are looking at the cost structure of production in the Philippines, basically also we are importing a lot. Our peso has depreciated, I think, significantly. And the price of fuel going up really did not help our case to have our currency be more protected. No, it's not. The Philippine peso has depreciated, and we are importing a lot more than before. So I think we have to be very, very careful with that. We cannot really manage the economy when we are importing products that are priced based on where the products are coming from.
Now, with what's happening in the Middle East, crisis between the U.S. and Iran is still quite volatile. We see Iran and Oman. They really haven't dropped Hormuz fee plan post MOU yet. Now, does today's number survive that if anything good happens with that?
Anything could happen, unfortunately. We are basically spectator. We are a spectator to what's happening in the Strait of Hormuz, in geopolitics. We are not really a major player. And therefore, it really begs that the government should be more defensive and should be more forward-looking. BSP has already taken its move. It already increased our interest rates by 25, probably. The Banco Central will probably entertain more increases, but I think we have to be very, very careful with that.
So you see,
our GDP is slowing down.
Yes.
2.8%, that's low.
But even with inflation slowing down, do you foresee BSP still increasing rates? We've seen 2 hikes in the past already, from 4.25 to 4.5 to 4.75. Do you see now, even with inflation easing, that BSP might actually start raising interest rates again?
The mixed numbers that we just saw, high inflation or headline inflation coming down a little bit, it's still high. Compared to last year, it was high. Compared to last month, of course, it decelerated. But compared to last year, it was much, much higher. But the 4.4% core inflation is a very difficult thing to manage right now. And I think the BSP, it put BSP in a bind. What do? The inflation is coming down, but just the headline. The core inflation is going up, it remains high, but in general, inflation remains high compared to last year. But we have not even touched the issue of how is that affecting the common people, the common masses. Remember, the bottom 30% consumes more than 60% of their income going towards food, and food inflation remains high. So the impact of inflation will continue to be felt. Although the headline inflation is coming down, the poor people, the common masses, they will always say, how come I don't feel it? And they are right. That won't be felt at the grassroots.
Not right away.
No, not right away. Not in the very near future.
Okay, now, but we see it's still good news to see inflation going down. And with that, also the good news that we had from the World Bank increasing us to the level of upper middle income grade. Now, does it make it look earned, or does it still mask damage already done to the lower income households? Now, where do we balance that? Is there still a disconnect between the numbers and the status upgrade that we just had?
I think I will bring in also the credit rating that we've been getting. One of our credit rating agencies pulled out the positive outlook to just stable. And to me, that looks like a little bit of a downgrade. And then another credit rating agency said their outlook is negative on the Philippines. And on the banking sector, a rating agency also said that our defaults are increasing, and therefore in the near term, it doesn't look good for the Philippines. So I will look at the upper middle income rating by World Bank and the credit rating agency together. To the common people, it doesn't mean much.
So who does it really benefit?
I think the World Bank will benefit from it because they will be able to charge the Philippines higher interest rate.
Yeah, there's an argument there that even if, it's a good sign that we were told to be leveling up to upper middle income status, but that also on the flip side, lessen on the funding, right? As a developing country, if we're in crisis, maybe funding won't be as much because people, outside observers see us as leveling up. So is that also a downside for us?
Oh, definitely. I think it's more of a bragging right. Look,
for who?
I come from an upper middle income country now, so you have to treat me as such. However, the credit rating agencies who are looking at a lot more, they're not looking at the Philippines we are in a very positive trajectory right now. Very cautious.
But a level of $4,800+ a year, is that really upper middle income status?
According to World Bank, yes. But remember how we got to the 4,800. That is the total income, including our brothers and sisters working abroad, the OFWs. And it doesn't reflect the equitability of distribution of income.
Yes.
So if you have trillionaires in that equation.
And if you do the average, yes, of course, the median will be that.
Yeah, and we don't get as much as the trillionaires in terms of income distribution. So we have to be very, very careful with these statistics.
But with the PSEI, we see it as rallying. It's still it's now above the 6,000 mark. It went below the 6,000 mark a few months ago, so it's kind of rallying. But does this print give the PSEI rally a real footing right now, or is it still just relief trading?
I think it's more of a relief, but I'd like to see it more sustained, and then see more indicators of sustainability in our income growth or in our development growth. That's why I don't want to use these statistics and say basically that we have already achieved what we have been looking for. No, we have to start looking at development goals of the country. You know, don't forget, we are undergoing an education crisis. Are we now able to bring up the education, the literacy, the functionality of our population? That is even more dangerous. That's why I always say, look at the economic statistics, but look at the development indicators as well.
So what kind of conversations are you having now with investors and businesses that you talk with in terms of how to change, let's say, the strategy right now in terms of investment? It was quite worrisome when I heard before that in the local stock market, only around 2% are actually investing in our local market. So how can we increase that, and what conversations come out of that?
Well, I think we have to increase the excess income of our population. If we want to have our investing more inclusive, it's not just the educational part. We inform that you can do this, you can have this kind of instruments, you can put in your money here. But then if the people don't have the money to put in those investments, they're not going to go into the capital markets. No, they're not. So they will just live with, okay, I want to put something under my pillow and then pull it when I need it. And
instead of putting it in a bank.
You know, rather than put it in the bank. Putting it in the bank for them doesn't get them a lot of money. Unless you have a lot of money, that's when you can really make money from these investments.
From your observation, Professor, did we really actually absorb this shock well? Or are we one incident away again from being back where we started?
Your question about did we absorb it? We more than absorbed this. You know,
like a sponge.
Oh yeah, in terms of price increases, I think we did more than 100% absorption of the price fuel price increases in the last few months.
Okay, now Professor, we'll move on to the rapid fire segment of this program. Let's start with this. Are we really upper middle income, or is that just on paper? You were mentioning it was just a bragging right.
It's a bragging right, and to the top income earner of the Philippines, yes, we are. Probably they're even calling it, no, that's less than what I make.
But that's not good for those average workers seeing that right now?
To the average workers, doesn't mean anything.
Okay, for its next meeting, should the BSP hike, cut, or hold?
Hold.
Hold?
Yes.
Why?
Well, interest rate makes capital more expensive. Our GDP is only growing, 2.8%. We need to boost our GDP growth rate, and by making investment more attractive. By keeping it high, I think that will discourage some of the investors.
Now, Professor, we have big IPOs coming up. Real PSE comeback or just a short-term bounce?
I think there will be a rebound short term.
With optimism there?
Yeah, yes.
Okay. Is the Duterte impeachment trial, which is going on right now, a concern for investors?
Oh, definitely. Because governance is a major consideration for investors. So if this impeachment goes haywire and
It'll cost us
unresolved,
more.
It will cost us more.
So what's the biggest risk right now to the economy?
I think the political noise is kind of loud these days. Remember, in terms of proceedings, we have the ombudsman continuing to investigate. There are other senators who are on the line, and we think that there will be more cases filed, and it looks like
Too many
it's
things
real.
going on right now. Investors are, before on the fence, are they now backing out?
Yeah, so we have the ombudsman continuing its investigation. We have the impeachment, and then let us not forget, there is still the ICC
yes.
trial going on, and there's still one senator that they are looking for that they want to
Well,
bring
we'll see
in.
what happens. And finally, Professor, put your professor hat back on. Beyond today's number, what's the one thing you wish every Filipino household knew to protect themselves financially in a year like this that we've been experiencing?
I hope that the government would have a better plan that would cover everybody. And for the Filipino to have also that kind of trust that when I am down, I have the government to do it. I'm not talking about the tupad, I'm not talking about the IX, I'm not talking about this...
Something more sustainable.
Oh, sustainable. More jobs.
Yeah, more jobs.
More meaningful jobs. Higher income.
Less ayuda, more jobs, more livelihood.
You know, the ayudas, I'm not really a big fan of ayudas. Although I worked for the SWD, you know, I can tell that the ayudas are really more of a feeding program. We need jobs.
Yeah.
We need higher paying jobs and more meaningful ones.
So that the upper middle income class status will really pay off.
Exactly.
Okay, on that note, thank you very much, Professor, for joining us this morning, sharing your insights and your advice, and showing us what the economy is like right now. Thank you very much.
Thank you.
And that's all for today. I'm Robert Tan. Thanks for watching. Keep it here on the Bilyonaryo News Channel, and always follow the money.